All right, Sandra, thank you. Stocks looking to rebound today after that sell-off yesterday. I'm with Marion Bartels and Peter Kaufman today. Peter, let's talk a bit about some of the financial services. We had a big week for the bank earnings. How would you characterize the earnings period that we saw, and where are we in terms of all of the regulations? Is it fair to say we're almost done, or is this just the new normal?
Well, the regulatory environment is a very interesting one because, on the one hand, there's been such public scrutiny about the health of the banks. On the other hand, what I've seen firsthand and have talked to in the marketplace, banks are not looking to see write-offs. They're willing to even see their borrowers take on more leverage to kick the can down the road and solve the near-term problem. Banks' philosophy really, Rhea, these days is a rolling loan gathers no loss. So they just want to keep deferring and deferring because regulators, for confidence reasons, don't want to see banks take the hit. That's really the big picture from my perspective.
Yeah, I mean, when you just look at a Bank of America right there, I mean, the litigation expense, J.P. Morgan putting $20+ billion aside for the regulatory environment. I mean, the numbers are mind-boggling. Of course, Peter, is all the deal flow. And I wonder if you guys think that this is a positive for the market. I mean, the whole tax inversion story is one part of it. The other part of it is that we're seeing such combinations. I mean, today, AbbVie and Shire Pharmaceuticals. What's your take on the inversions?
Well, the inversion is a political football.
Yeah.
It's legal to do what they're doing. It's driven by the market, the world marketplace, because we have such a high corporate tax, higher than any place else in the world.
39%.
And the issue isn't tax inversion. That's the populist theme. The issue is, when are we going to overhaul our corporate tax system and overall tax system so that these sorts of transactions aren't tax driven?
Yeah. Do you think that all this consolidation is a positive for the stock market?
CEOs are seeing that the market's receiving both the acquirers and the acquirees favorably. But interestingly, in the first half of the year, 4 of the big 6 deals were healthcare and healthcare IT driven. One of the many consequences of Obamacare is that there's a increased need for IT improvements for the consumerism and the need for efficiency in the marketplace, and companies are buying that rather than developing it themselves.
Yeah, for sure. I mean, and not only that, but not to mention you see the float shrink.
Well, and that's the story that no one's really talking about, which is these artificially low interest rates are killing people who depend on rate of return for their existence. Anyone who's lucky enough to have a pension is very unlucky with what's going on with interest rates. The bond market hasn't been volatile, the rates are really low, and it's an issue.
Yeah, really, really interesting stuff. Peter, Marion, really good to see you today.
Same here.
Thank you so much for joining us. Marion Bartels, Peter Kaufman joining us. Straight ahead, FedEx being